Hey guys, what's up? Welcome back to the podcast. And this time on the podcast, we have Karthik Rangappa. Karthik is the VP of Education Services at Zerodha. He's the author of Rupee Tales and Varsity. So the show we discussed about the capital markets, centralized currency, the upcoming probable recession, and a lot more. So without any further ado, let's begin. Okay, so Karthik, before we jump right into the meat of the conversation, I want you to tell the listeners what you do, who you are.
All right. Yes, thanks so much for having me on your podcast show. It's wonderful to be on your channel, especially after having learned what you do at 17. Right? So it's an amazing experience for me as well. So anyway, my let me formally introduce myself. My name is Karthik Rangappa. I work at Zerodha Broking Limited. For your listeners, Zerodha Broking Limited is probably the largest stockbroking company in India. I handle the education services for Zerodha Broking. Uh, One of the things that we do at Zerodha, which is a very key critical part of the company, is financial literacy, and we put an immense amount uh, of time and efforts to create quality content and with a genuine intent to educate people. I'm saying people, and I'm not using the word customer because we don't really care whether the person consuming the content is a client or not. We just want to educate whoever has an intent to learn about capital markets in India, right? So we do this in the form uh, of text-based content, article-based content, and we put this up on a portal called Zerodha Varsity. So that's something I take care of and at Zerodha.
Interesting. So, let's get into the story part of the situation, right? How did this happen? Like, how did you stumble into like the financial author situation? Like, how did that happen? Did you have a job earlier? क्या scene था पहले? Did you do something different? And one day you
Uh,
decided,
it,
okay, yeah.
it was all by chance, right?
Hmm?
I never really intended to be a stock market educator.
Mm-hmm.
Uh, like everyone else who enters the stock market, I too got in because I wanted to make money, right? Uh, when this was long ago when I wasn't aware of how the stock market functions. I just went with a certain amount of capital because someone told me that this is a place where you can earn potloads of money with very little effort, right? So I really wish I can find that person again, and I'm going to probably redefine that definition for the gentleman. But I'm glad he gave me that definition of stock market. So because what started off as a very naive experience has, when I look back upon, has turned out to be a beautiful journey, right? So anyway, so I started off with the intent of making quick money. I kept making mistakes, or needless to say, very obviously, it's not easy to make money in the stock markets. I kept making several mistakes, uh, but what really, you know, helped me was I never took these mistakes as with a negative. In a negative angle, right? So I took this as an opportunity to figure why I was doing uh, wrong things and try to figure how I could improve on my trades, improve on my investments. And one thing led to another, and one fine day I realized uh, that it's been continuous learning journey in the stock markets. Right? And when I gained some ground, that is after spending about 4 5 years, I think at least five plus years, I uh, I went to do my masters in the same subject. I went to France to a place called EDHEC. It's in south of France. I did a course on this topic called risk and asset management, and and it was a very fascinating experience. Right? So and I got an opportunity to look at markets from a very different perspective, from an academic perspective as well, right? So it was a formal education in this field. After all that, when I got back to India, I really had the intent to. I really had the desire to get into portfolio management. Right, I wanted to manage people's money and help them make better investment and trading decisions. Right, and but but the thing is, when you have such a setup, your payoff is very, very slow. You don't make money until and unless your clients make money, and with investments, it takes time. It's not overnight, right? So I had to pay the bills somehow, and somehow I figured there was an opportunity to uh, teach people about stock markets because there was a huge interest to learn. And I tapped into that opportunity and got into educating people. Right, so that's how my journey as an educator in stock markets started.
Interesting. Like, how when did you realize that you know enough to become like an educator? Like, when did that point hit?
See, I don't think so. There is a anybody can point to a certain point uh, in the past and say that's when I knew everything. Right? It's a
Mm-hmm.
continuous learning experience. So I don't think so. I know enough even today after all the amount of time I've spent here. There's so much more to learn and explore. So, but if you look at it from a very from if you slice it down into let's say what is it that a beginner should know,
Hmm.
uh, and or maybe you can look at it in a slightly different way. If there is a beginner, uh, how should the person avoid making all the mistakes that I have made? So you can look at it from that perspective and design a certain course that will uh, help the person avoid make mistakes and start treating stock markets with some common sense.
Interesting. So
Right.
do you think
So
like anybody can become like an educator, like with like the basic fundamentals, like just to know what they know, teach what they know? I think anyone can become an educator. That's what you're trying to say.
see the key ingredient to be a good educator, irrespective of which field, I suppose, is patience. You need
Hmm.
to have extreme amounts of patience. You need to, uh, irrespective of what your experience has been, uh, if you need to have enough patience to teach an absolute beginner the ABC of the subject, right?
Hmm.
Be it stock markets or sales or coding or whatever. So unless and until you have that patience, as long as you have that kind of patience, I think you can be a good educator. So of course, patience backed the with the necessary domain expertise,
Interesting. So how
right?
did France change you? Like, how much of what you are today, would you like to say it's because of France, like a master's degree?
Uh, uh, I think the education, the academic rigor in France helped me quite a bit, in the sense that before I went there, for me, stock market was all about, speculation, right? It was about looking at the chart. It was looking at the news, trying to design a trade largely based on gut and whatnot, right? I never knew that there is a formal process to this. There is a structured approach to stock markets. So I think the first 3 months of my master's degree kind of blew my mind away when I realized that there's a whole new world to stock markets, which is far more sophisticated, far more structured, far more sensible approach to stock markets. So it was mind blowing, and I think anybody, I would strongly suggest anybody with an intent to build a career in stock markets at some point consider a formal degree of sorts, in something related to capital markets. It's going to add a lot of value add.
Interesting. So, what do you think about the current capital market education space that's actually circling in the social media circle? Like the couple of finance influencers popping like every day. What do you think about that? Like people learning from those and sort of trying the stock market out.
So there's both good and bad
Mm-hmm.
with that, right? So good thing is, uh, these influencers, because of the vast network they have on social media, introduce new people to stock markets, which is good because it new people bring in liquidity to whatever
Hmm.
extent, right? So they bring in liquidity, which in turn is good for people who are making long-term investments. So there is that good part of
Hmm.
bringing new blood to the market. But unfortunately, most of these influencers, I've seen a couple of videos. Uh, uh, they are pretty clueless on what they're talking about, uh, and but they talk with so much confidence and so much attitude. It almost comes across as,
Hmm.
this is it, and it's as easy as this, right? So there's both good and bad. I really wish there is some sort of regulatory intervention uh, to ensure that there is a certain minimum qualification of sorts for these influencers, and I hope somebody actually vets all the content that these guys put out there, and ensure that it's clean and uh, not nonsensical.
Interesting. Like, I think the regulation part actually makes sense, right? Because I know a couple of people who just sort of put in X amount of money after listening to one influencer and just losing it all, and it's just saddening,
Yeah,
right? Because after a point, if they won money, if they just win money, the influencer just wins because they'll keep sort of following him. But if they lose, the influencer can just be like, okay, that's how the market works. It can fall sometimes, and it's
yeah,
saddening for them.
exactly. See, the good thing about giving an advice in stock market is that you're never wrong. You can
Yeah.
say whatever you want, and at some point you are always right. And that makes it so much easy for these guys to blabber whatever uh, that comes to their mind.
What are like the few finance influencers you would like to sort of recommend? Like, which ones like
Uh,
do you think are qualified enough to sort of not give advice but sort of educate about the stock market scene?
uh, Frankly, I don't follow anyone,
Acha.
so I don't none. I don't think so. I get there's any name on top of my mind, right? But there are a few good people on Twitter.
Mm-hmm.
They don't really uh, have a presence on Twitter with the intent of influencing people. They're just high quality folks with original ideas tweeting stuff, right? So, for example, Morgan Housel from The Psychology of Money,
Mm-hmm.
I really like to follow his tweets. So yeah, so there are people on Twitter who put out good content there. So not really with with the idea of
Mm-hmm.
influencing people, but generally putting out good content. So yeah, so but no one on Instagram or YouTube or
Mm-hmm. Fair.
you know,
Fair
stuff
enough.
there.
What do you think? What do you think that happened last year? Like the markets went crazy. Do you think that was because of the influx of people coming in due to these influencers sort of influenced by the sheer amount of
Uh,
content that was being produced? At least last
uh,
year.
yeah, I think it was a combination of factors.
Mm-hmm.
At the top level, you have the larger macroeconomic situations playing out. There was so much more liquidity that was driving the markets, right? So liquidity both in terms of uh, supply side and demand side, which was kind of peaking. But of course, what you said also added to the overall sentiment in the market. That's new people coming in, but that would be one portion. But larger macroeconomic situations had a role to play.
Interesting. So, what's your simplistic definition of the stock market, and where do people get it wrong for the most part?
Well, I think before you kind of define what a stock market is, I think you need to understand uh, what an asset is,
Hmm.
right? An asset is something that has a future economic value,
Hmm.
right? For instance, let's say you buy a piece of land today. It is generally perceived that the piece of land is going to increase in price over time, right? And at some point in future, when you want to sell this off, you'll always make whatever you paid originally plus a little more, right? So there is a economic uh, incremental there. The same thing goes with, let's say, gold, right? Gold prices generally have appreciated over time. If you look at last 2000 years history of gold, right? So gold also tends to appreciate in price. So anything that has a future economic value can be classified as an asset. For example, if I buy this mobile phone, I wouldn't consider this as an asset because if I pay 30,000 today, after several months, if I sell this in the market, I'm not even going to get half the price for this, right? So that's a depreciating asset. That's a thing that depreciates. I
Hmm.
wouldn't even call it an asset, right? So keeping that definition of asset, let's go back to stock markets. Stock market is a place where a certain type of asset is traded.
Hmm.
Now, that certain type is the equity of a company, right? An equity of a company or a share of a company is something that entitles you a certain ownership, right? Now, stock market is a place where equities are traded. And what do I mean by traded? Traded is basically a place where different people go with different opinions on that asset. I may feel it is this asset is fairly priced. You may come to the market with a different opinion where you feel the asset is not priced right. It has to be traded lower. So we both are looking at the same asset, but with two different opinions,
Hmm.
right? And when we transact on that uh, asset, right, or when we transact on that equity, uh, we kind of agree on a certain price, and I'll be the buyer, you'll be the seller. So a trade occurs. So that I think kind of defines what a stock market is, right? So it's a place where many people, gather to with varying opinions on equities as an asset.
Interesting.
Of
So,
course,
mhm.
I just spoke about equity, but there are things like currencies and commodities, etc.
Interesting. So, what do you think about like teenagers sort of investing in the stock market? Because there were a couple of people on Twitter who are like, "Ki investing at a young age might not be the ideal scenario because there are better things to do with the time and sort of make more money and invest on the side." What do you think about teenagers being like career traders at like what 18, 19? Do you think it's a
So,
good way to use the time?
see, Varsity has a range of uh, uh, readers.
Mm-hmm.
When I say range, I think the youngest reader who actively posts comments is I think about 12 to 13, right? So that kid posts a lot of queries. Uh, for his age, I think he's done phenomenally well in terms of understanding the capital markets and stuff. So I don't know how that is even possible, but yeah. So that's on the lower end, and I also have and kind of exploring new things in life, right? So that's the broad range, and but whenever I see comments from the younger audience, I feel very happy because see, you can't escape the reality of not making an investment in your life, right? So
Hmm.
everybody needs to make an investment, and everybody needs to generate a certain rate of return on their savings. Uh, whichever way you look at it, I think eventually, if you are going to take if you're willing to take a certain amount of risk, then you will have to come to the stock markets, right? To seek those returns. So you may as well get started early and benefit from time, right? So one of the key components in when it comes to investing is actually time. It's and the patience that you give your investment. So you're better off doing it early and the stock markets. And also, the assumption is when you start off early at a young age, uh, your your availability of capital will be smaller
Hmm.
because it will be usually your savings from pocket money or whatever. So that also means that you're making mistakes on a smaller amount of money.
Hmm.
And when you're out there graduating and start earning a serious salary and start saving, hopefully you will make smaller mistakes on a larger capital base, right? So it's good. I feel very happy. I feel uh, thrilled when I get to hear about uh, teenagers and kids showing an interest in stock markets, as long as it's done right. Of course, you get carried away and trade away and gamble, then that's a sad thing. You need to watch out for that.
Okay, how do you make sure that you do not gamble in the stock market? Like every decision you make, how do you make sure it has certain reasoning and not just like emotion running through?
Yeah, so I think you answered that yourself, Yash. So the thing is, before every uh, transaction in the stock market, you need to reason it out. You need to have a thesis. Why am I doing what am I doing? Right?
Hmm.
Why am I buying the share? What is my trigger to buy the share? Is it an impulse? Is it because I feel there is going to be a change in business? Have I done enough research? So I think if you're true to yourself and start answering those questions, you will kind of not gamble away.
Hmm.
But if you feel okay, a sudden rush of impulse running in you, and you want to buy a stock just for the kicks, I think you shouldn't be kidding yourself. You are gambling, and that's not good.
Interesting. So, what do you think about like the WhatsApp groups that exist, like which give tips on the stock market? Do you think it's
Yeah,
wise to be a part of those, or do you think it's just better to do your own research and read company financials?
yeah, yeah. I think I would love to say delete WhatsApp, but no. I think all of us need it because it's a beautiful way to communicate with friends and family. Uh, but I think use it just to that extent. Do not attempt to get into these toxic WhatsApp communities
Mm-hmm.
with which is doing stock market ideas and trading tips because it's a medium for a lot of tipsters and manipulators to manipulate stock prices and suck you in into one of those scams. So avoid it. And I'm saying this with a lot of experience. I deal with you know uh, people in this industry on a day-to-day basis. I know how these things kind of operate, so it's best to avoid.
Interesting. How do you think like the tipsters sort of benefit out of the people they are sort of influencing for via the stock market? Why do you think they're doing this?
It's simple, right? So for for everybody involved in stock markets, the only incentive is the rate of return,
Hmm.
right? So everybody in the stock market is there for the returns. It's is there for uh, is there to make money on their investments. Now, some people have ulterior motives in the sense they want to manipulate the stock price and ensure that they generate that return overnight,
Hmm.
right? By artificially manipulating the prices. One easy way is before I put a tip on a WhatsApp community which has hundreds of people, I accumulate the shares, make sure that I've got enough quantity of the shares in my demat account, and then start circulating tips on WhatsApp groups, and then kind of make it a viral message. Then everybody starts buying those shares, and because of the natural demand that is created for the stock price increases.
Hmm.
And at a certain point, when it has increased enough, I offload my shares and I get out of the market with my rate of return, which was generated overnight, and uh, and then the stock price starts collapsing because there is no real reason for it to have risen up in the first place. And all the investors who've invested based on these tips kind of get stuck with junk stock, and they'll have to wait on it forever to go back to those high levels so that they can make money. And 9 out of 10 times that never happens, and you're just stuck with stupid stocks in your demat account, right?
Interesting. So like, does it happen to you? Like people just come up to you asking for stock market advice? Like, does that ever
Oh
happen?
yeah, yeah,
How do you
yeah,
deal
yeah.
with that?
All it happens. No, I point them to Varsity. I say, dude, whatever I know, it's out there. So it's best if you read through and generate your own ideas, right?
Interesting.
But
So
but that
yeah.
happens.
Uh,
No, but that happens all the time.
Interesting. So let's talk about Varsity, right? So how is it writing for the masses? Because you know tons of information about the stock market and the capital markets, right? So how do you
Yeah.
make sure you put out enough so that the masses get it, and like it's not too sort of dumbed down and it's still valuable? How do you make sure that happens? Like when you're an author.
You see, most of the time when I write for Varsity on any topic, I look at it as a way of clearing my own thoughts about that topic. I'm actually
Hmm.
writing it for myself, right? So and I take time to understand things. I'm not the kind of guy who can read something once and get the concept like the back of my hand. I need someone to explain things to me with patience and then take me through the content, right? So I kind of write write for myself, right? I try to dumb things down and break it down into elements and understand piece by piece, right? So and and it so happens that when you do that and strip down a concept to its element and explain the basics, it also appeals to the masses, right? It appeals to the masses because on average, stock markets itself is a very complex topic.
Hmm.
It has several nuances, but when you strip it down into basic elements and assemble it all together in the end, where how all those elements kind of fit in and make up the concept, it kind of appeals to the masses and they can start relating to it in a better way. So I really don't like to, uh, although finance is very complicated and with, with each topic having several subtopics, I don't like to use those standard terminologies
Hmm.
uh, because I just don't like it because it makes it very intimidating for a person uh, to start learning about markets. So prefer to dumb it down, and it's okay to dumb it down as long as you don't lose the essence of the topic, right? So that's what I do, and writing is mainly for myself,
Hmm.
and I try to explain the concept to myself in a very simple and ordinary way, and uh, and luckily it has worked, and people kind of appreciate it.
Interesting. Like, what's an observation from Varsity? Because Varsity has like multiple users, right? So, what have you observed? Like, let's say from the back end, what is an interesting
Mhm.
fact that you saw? Like, probably like the
Yeah.
retention from the age groups.
See, we get information about age groups only if they mention, right?
Acha. Hmm.
Although although we can run several analytics on Varsity, uh, mainly through Google Analytics and WordPress Analytics and stuff, we don't do any of that stuff. We don't track any metric, right?
Acha.
Because for us, what matters is focus on content and putting up quality content. We don't really do this from a marketing perspective. So there is no incentive for me to spend my time and energy to track metrics. Right?
Hmm.
I don't care what age group the my audience are. I don't really want to know their email ID. I don't want to know their IP address. I don't want to know their uh, demographics, whether it's a male, female, what age. None of those things matter, right? Because we are not there trying to make money of this initiative.
Hmm.
So we don't really track any of that stuff. So which allows me to focus only on content, right?
Interesting.
So yeah. So given that,
Hmm.
I don't know if I can answer your question on the metrics that you asked me about. So
Like, wouldn't it be like better if you sort of looked at retention and see where people just drop off and sort of figure out why they dropped off and stuff, or do you just want to write for yourself and you actually know
yeah.
that people still read it because there is already so
So
much distribution.
yeah. See, over the years, I've got a sense of uh, to what to what extent or word count it
Hmm.
makes sense to have the article, right? Whether it is 1,500 words or 2,000 words, I kind of know where the cutoff is, and I try to end my long form articles there. So that's the thing I've picked up over the years. I don't, if it's too lengthy, then people drop off. First and foremost, I think uh, if you are on varsity reading, that means you not only have the intent to learn about capital markets, but you also have a ton of patience because all the content is long form articles, right?
Hmm.
In this age of snappy reels and YouTube shorts, I think you need to have a lot of patience to read through content, text based content,
Hmm.
right? But surprisingly, there's still many audience who people who prefer that type of learning as well, right? So I know over the years I've developed a sense of how long the article should be, and uh, and what sort of readability the article should be. So I've got a sense of that. Apart from that, I've never really spent time on analyzing where the drop-offs is and what can I do to make that better. Maybe that's something I should
Mm-hmm.
think about. I'll take that away as a feedback from this podcast.
Awesome. So it's a great, right? It's almost sort of functions like a filtering mechanism where people who are only interested will sort of read Varsity. So was this like the first thing you ever wrote, or did you write blogs in the past? Did you actually write books in the past?
Yeah, I mean, I've written things for myself,
Hmm.
my own notes. So I have plenty of those, but never in the form of blog. It
Acha.
was mainly in the form of academic notes and scribbled. If, for example, if I was trying to learn about, learn about a certain type of option strategy, then I would spend a lot of time trying to understand the nuances and make my own notes. So all the old school pen paper way,
Interesting.
right?
Like as an
So yeah,
educator, do you think like note taking is something that has to be mandatory and actually works? Like I think, do you think it's like a very good way to sort of keep things in your mind, like while learning?
yeah, I think uh, I wouldn't say mandatory, but it's a very nice thing to do
Mm-hmm.
because human mind, I think, is very um, cluttered with a lot of distractions. So it's always good to put things down on pen and paper and make a note of things, right? So it's a very good habit, and it certainly helps.
Interesting. Let's talk about Rupee Tales, right? So Rupee Tales is mainly for children, and like, how did you like was what was the experimentation process? What was the research process? Like, did you actually go to children and ask them their perspectives on money, and how do you make sure like the content you're writing is like consumable enough for kids, but also it still has that nuance so that the kids understand about the markets. Like, what was the research process like?
Yeah, yeah. So Rupee Tales was a very interesting adventure. It all started when my elder daughter, she was 7 years back then, and and she asked me one evening. She asked me, "What is it that you guys do at Zerodha?" Right. So I mean, we all hang out together, families, and everybody knows everybody, right? So
Hmm.
my family knows Kailash's family, or Venu's family, and everybody knows everyone. So my elder daughter, she asked me, "What is it that you guys do, hang out and do at Zerodha?" So and I kind of struggled to explain to her what Zerodha does, and I kind of struggled to explain what stock markets are and how things function in stock markets to a 7 year old. So the next day morning, I was at office and talking to everyone at office, and I said, "Look, this is what my daughter asked me, and I struggled to explain." And that's when we thought that being one of the biggest players in the country for stock markets, in capital markets, maybe it's our responsibility to not just educate young adults and adults about stock markets. Maybe we should try and attempt explaining stock markets, not just stock markets, basic concepts of finance, right?
Hmm.
Um, to children as well. So I said I would. So I decided to give it a shot. I thought maybe uh, I should give it a shot and see how it goes. When I decided that, in my mind, it was I just have to explain these things to children, so maybe I can be done in a month or two.
Hmm.
That was a gross underestimation because I ended up taking a year and a half to do details, right? Because I think explaining to children is far difficult than explaining to an adult, right?
Hmm.
So I didn't know what I was getting into, but only when I started writing for children, I realized it's so much more difficult. Although, like illustrated storybook may have 10 pages, 10 large pages with some information on it. I think coming out with those 10 pages is like coming out with an entire module on Varsity. So it took a lot of time,
Mm-hmm.
and but it was fun and it was a very satisfying experience.
Interesting. So, how did you define money for the children? Like, money is something which I actually struggled to understand when I was younger, right? So, what's your definition of money that you'll give to, let's say, a 6 year old?
Uh, I think explaining money to a 6 year old. Uh, Listen, I think talking directly about money will not serve the purpose,
Hmm.
right? You need to explain things around money. For example, uh, why would you want to save and how would you save? What are your channels to save? And why do you want to allocate a certain amount of money to for an emergency purpose, right? So things around money, if you start explaining, I think eventually they'll understand that money is a very important commodity, and they'll start uh, treating it right. So you just have to identify pockets uh, that they can relate to and start, take that approach.
Interesting. Like, why do you think money works? Right. This question I've asked to Para Chopra as well. Like, why does money work? Why does the system? Why is it still working? Because it's been around since a long time, right? So, why do you think it's work? Is it just the Lindsay effect or क्या scene है?
Uh, I think it works because all of us kind of have a consensus that it works, right?
Mm-hmm.
We all have that um, opinion that we need this commodity for all essential things in life, right? Without which systems start failing, right? And it has a profound impact on uh, everything else, right? From your outlook towards society, to your relationship, to your career. It has an impact on everything, right? So I think because all of us agree that a certain currency is valued at a certain price, uh, it works. Moment everyone starts disagreeing, moment when government starts failing, moment when uh, you know central banks start failing, money will stop working. And it has happened, right? It has happened right in our neighboring country, where Sri Lanka, right,
Mm-hmm.
where it kind of defaulted on uh, on its own debt, and that's a failure of money. That's a failure of system, and money is the collateral damage.
Interesting. So, what do you think can change in the money system so that we sort of avoid these failures? Like, do you think like a central currency for the entire world? Do you think that's an idea we might chase probably in a couple of years?
See, that's a very fancy thought, a central currency of sorts,
Mm-hmm.
but it won't work, in my
Interesting.
opinion, because yeah, it won't work in my opinion because uh, look, look what happened in Europe, right? When Eurozone uh, was being formed,
Mm-hmm.
there were many countries that backed out of the, like, for example, Switzerland is, you can't you can't they still have their own currency. UK still has their own currency, right? So so I think uh, in my opinion, a central currency may not work because currency also has a lot of subtle uh, things like the cultural effect,
Hmm.
which is very hard to bake into the central currency equation, and
Interesting.
and things may not hold up for a long time.
Yeah, I kind of agree on that. 'Cause I was right. Just think about it. Right? Even the currency that was in the past, like they used to have like sort of, they had the kings embossed on the coins or like whatever on
Yeah,
the
yeah, yeah.
notes, right? And that sort of instills trust in the people. So if it's like a central currency, what are we going to like
Yeah,
emboss?
exactly.
Like
Yeah,
what the shape of the
yeah,
earth? I don't know. I don't think that will work. And if there are people who sort of
yeah,
disagree on it, they'll just lose out on the
yeah.
entire currency, and it sort of won't make
Yeah.
sense.
And so, I mean, if you go back to the same European example, right? So
Mm-hmm.
it's a collective. I mean, you have some economies that do extremely well, and some economies that don't do so well, right? For example, Germany is a very strong economic contributor to Eurozone, but maybe Greece is not.
Mm-hmm.
So why should these questions have come up in the past, right? So why should uh, the the German economy uphold uh, Greece's economy? Uh, Maybe Greece is in that spot because of their own mismanagement um, of their political situation in the country. So why should Germany bear the brunt of that? So these questions have come up in the past. It's still a raging debate. I don't know for how long this will hold.
Mm-hmm.
Uh, but yeah, I don't have an answer for your question yet. So I don't know if a central currency of sorts is a good idea.
Interesting. What do you think about the current cryptocurrency space? Like, what do you think it's happening? Do you think it's right, wrong?
Listen, I have zero idea about cryptos.
Acha.
Yeah,
Okay.
I am not qualified to give you any opinion on that. But but you know, having seen and read few things about crypto, I think it's a giant bubble, right?
Hmm. Mm-hmm.
And it's going to blow up in the face one fine day. It's just that I don't know when. But unless I'm terribly wrong and I don't understand anything about this. So, but from whatever little pieces I can patch together, I think it's a giant bubble. I wouldn't put my money there, nor would
Interesting.
I advise my uh, friends and you know near ones to go anywhere close to crypto.
Interesting. Let's sort of dabble around this, right? So, why do you think it's a bubble? Like, what are the certain red flags that you're seeing? Just say you're thinking, "Okay, okay, this might be something which shouldn't exist."
Listen, you spin a coin overnight,
Mm-hmm.
and you remember the example, the WhatsApp thing that I spoke about,
Ha.
right?
Ha. Ha.
Where you pump share prices.
Mm-hmm.
So something similar is what is happening here as far as I concern, right? You spin a coin out of thin air, and overnight you assign it millions of dollars of market cap,
Mm-hmm.
right? So, and on what basis? What is the underlying here? What is the underlying economic driver for that market cap, right? So, and what basis would you assign so much of value to it? So,
Hmm.
so, and you start asking these fundamental questions, and you'll realize that none of the theories hold up.
Interesting.
So
Hmm.
none of the known economic theories, none of the known concepts, right? Tenets kind of hold up here. So which makes you feel that everything is just made up in air,
Mm-hmm.
and hence you call it a bubble, right?
Interesting.
So
Do you think like the blockchain space or like the technology aspect of it is something we should keep in mind? Because if you think about it, blockchain, I think it can be implemented in multiple ways, even in security and like let's say basic ledgers, you can just
yeah,
replace it with blockchain for the most part. What do you think about that?
yeah. I've heard. Again, I'm not a qualified person to talk about this,
Mm-hmm.
but from whatever little whatever little I know, I think blockchain technology is has its use cases.
Mm-hmm.
Even in terms, I think the U.S. markets where fractional shares are allowed to trade. I think ledger keeping using blockchain as a use case there also. Pretty much we can extend that concept here whenever fractionals come into play. So I'm just talking about the capital markets. I'm sure there are multiple use cases in other domains as well.
Mm-hmm.
Technology per se probably is there are you can use the technology for different domains. But crypto as a currency, as an asset to trade and invest, that I'm not sure.
Interesting. So the reason why sort of crypto boomed, like even initially, was because people sort of stopped trusting the money system, like the general money system or the banks. So what do you think is an alternative to the actual money system? If not crypto, like what do you think a person can do if they don't trust the banks?
You invest in bullion, right? So
Hmm.
you can if you don't want to keep your asset in form of cash, then probably you can keep it in the form of bullion. You
Hmm.
can invest in metal because metals have always gold and silver have always worked as a hedge against uncertainty. right?
Mm-hmm.
So at least that's the perception. So you can invest in that. I think the problem is people go to crypto not because it's an alternative to a currency, because it's a speculative instrument which can give you that hundreds 100x return
Hmm.
overnight. So nobody goes to the crypto world, as far as I know, with an intent to safeguard from government and safeguard from a collapse of our system or whatever was the original premise.
Hmm.
People go there for those 100x kind of returns overnight. So I think that purpose is lost long back. So it's
Interesting.
just a
Yeah.
pure
Yeah.
speculative medium now.
Interesting. So, see, I've sort of was sort of scrolling the news and watching a couple of videos recently, and there are a couple of people who are saying a recession is going to come or it's already here, and even Secure put out something which said ki recession is going to come. There'll be a couple of layoffs, and the funding situation even in the startups will be like less, because last year people were just like sort of throwing money on almost every startup which was sort of scaling.
Yeah.
So, what do you think about this? Do you think a recession is coming, and if it is, like, how should a general person sort of prepare for it?
See, there are a couple of things that, uh, at least on the macroeconomic front, indicates that it's not all rosy for the markets. One is mainly about the inflation. There was a lot of liquidity, uh, over the last few years. Mainly that liquidity was uh, from the supply side, right? Sorry, demand side, where there was uh, central banks doing their quantitative easing and supplying money to the system. So, and improving the liquidity. So that because of COVID and whatever, right? So
Mm-hmm.
there was and that kind of peaked. And on the other side, there was the demand side. There was on the we had situations of supply chain and China holding commodities because they anticipated the commodity prices to go up.
Mm-hmm.
So on the macroeconomic side, none of those things are pointing a rosy picture.
Hmm.
So that is a bit scary. Then you have Ukraine and Russia war that is ongoing,
Mm-hmm.
uh, and I was hearing this somewhere on another podcast that the chance of Russia not tapping into their nuclear arsenal it's a non-zero probability now,
Hmm.
given that Russia is getting cornered. So that's a very scary situation. So given all these things, I don't know if a full-fledged recession is going to hit, but it's going to be a bumpy ride ahead. So you need to position your portfolio, your investments, keeping these things in the back of your mind.
Interesting.
So, so yeah. So I think
Mm-hmm.
tread with caution, and it should be okay.
Like, what are the certain check marks you need to sort of hit before, sort of prepare for this session or like the bumpy period that's gonna come?
Uh, if you have like a large lump sum to invest, I'm giving you one case,
Mm-hmm.
one situation here. Let's say you have a large lump sum to invest. You phase it out, right? You can, instead of putting it all at one go in the market, phase it out like a systematic investment. You know, uh, Systematic investment plan, SIPs,
Mm-hmm.
right? So
Mm-hmm.
phase it out over time and allocate capital based over time. Don't be in a hurry to put all that. You may want to sit on cash itself for some time to watch out how things unfold. So so that's the most straightforward thing to do. But then again, and if you're already invested, and if you understand markets well, if you understand financial instruments well, then probably you can try and hedge your portfolio
Mm-hmm.
uh, in terms of buying a put option or something like that. But that's for someone uh, who understands markets well, right?
Hmm.
Uh, but yeah, so it really depends on your situation uh, what is it that you want to do in the market. So based on that, you can position yourself.
Interesting. How similar do you think this is gonna be to 2008?
See, 2008 was a very different situation compared to what we are in today, right?
Mm-hmm.
So, uh, 2008 was largely driven by the greed of you know packaging risky junk bonds and trying to make a spread on that. So that was manifestation of that sub.
I think I lost you. 1 second.
More of
Yeah,
a.
we're back. We're back. Yeah.
Yeah, can you hear?
Now I can. Like for the past like 10 seconds, I think I couldn't. Can you repeat like the past
Yeah,
10 seconds?
yeah. So what I was trying to say is
Mm-hmm.
2008 was a very different situation because that was mainly uh, where banks were had gotten really greedy and they were trying to sell subprime junk bonds to investors to make a certain
Mm-hmm.
return quickly, right? So that was 2008 in a nutshell. But today, the situation is very different. What started with COVID uh, has led to other things, things like inflation on the supply and demand side, excess liquidity sloshing around, and that getting dried up now because banks have started to tighten it. And of course, the Russia-Ukraine situation, right? So
Mm-hmm.
things are very different, but the outcomes can be similar. So that's the worry.
Interesting. Okay, so we're almost at the end of the conversation. So yeah, last and very cliche question is how does someone play with the stock market correctly? Like what's the right way? Let's just start out.
Uh, I think the right way is to not play with it in the first place.
Okay, wrong word. How do you how do you, how do you not operate? Okay, how do you sort of let me figure
Um,
out the word. You
mm,
can help it.
I
What's the
think
right way to use? Yeah,
how do you position yourself in the stock
yeah,
market?
fair. How do you position yourself in the stock market correctly and not play with it?
Yeah, yeah. So uh, I think what you can do is to uh, set your expectations right to begin with.
Hmm.
Right? Stock market is not a place where you can make uh, crazy returns overnight, right? So have that expectation sorted out right at the beginning. Stock market is a place where you can generate wealth over time, right? So it won't happen in a hurry. So be absolutely clear about that. Uh, don't when I say create wealth over time, I'm talking about basic returns like 10%, 11%, 12% per annum. I'm
Hmm.
not even talking anything beyond that. So, keep that sort of expectation and give it a lot of time. I think the most easiest and the most simplest way to start your journey is pick any decent large cap mutual fund and start a systematic investment plan. Right? I know it's a very boring advice. It's not dynamic. It's not like picking up a stock and trading it actively or doing a derivative trade or whatever.
Hmm.
I know it's not fancy. I know it's a very boring advice, but this done right and given a lot of time has a very high chance of working in your favor, right? Say end of the day, color of money is the same. So whether you make money trading derivatives with all the stress and anxiety, or you make money peacefully by making systematic investment plan, it's the same. The return will be the same. It's just that the journey will be far more peaceful and stress free if you opt for this, right? So you look at stock market as a place where you can park your savings and give it time and use your time and energy to do something else in life productive, right? So just don't focus too much on stock markets. So use it to the extent that is required.
Interesting. Awesome. Thank you so much for your time, Karthik. It's been great talking to you. I hope it's
Yes,
likewise. So yeah, uh,
absolutely.
the
Thanks.
the links for everything that Karthik has done are in the description down below if you guys don't know. So yeah, for the till the next episode. Bye bye.
Thanks,
One
man. Thanks.
second. One second. Don't leave. Just